a directional trader, but the bank's doing statistical arbitrage. So what we're looking at is perhaps something like this. This is just an example. It's not the actual, but it's just a possible example of what Max might see. So we can obviously look at the idea that there's perhaps a sell on the NASDAQ and a buy on the S&P. So what would somebody like Goldman Sachs do? Well, what Goldman Sachs would do is they know they're going to get a lot more size on the S&P, right? So if they've got value to buy the S&P, what they'll do is they'll sell some NASDAQ. Why did they sell some NASDAQ? Because they know that the algorithms that do index arbitrage, if the NASDAQ starts falling, the S&P will follow suit. There's going to be selling coming into the S&P. Otherwise, we get an index arbitrage forming. So they adjust it down, so there's a lot of selling pressure comes into this. And obviously what happens is that we start thinking about that. Now, what happens to Max is Max goes on ST, which is a starting point for the arbitrage. That's the starting point. So what now has to happen is Max is going to be watching for the lower price. The arbitrage has to be purchased. So at the moment the arbitrage is value, but the arbitrage has to be purchased for Max to be interested in the deal. Otherwise, we're just going to let the price fall. If Max doesn't see the arbitrage getting purchased, then there's absolutely no value in us taking advantage of the lower S&P price. So when the price then drops even a little bit lower, what's going to happen, of course, is the S&P boys are going to come in now and start buying up this trade at lower prices with the sell pressure coming in from the NASDAQ. The sellers will be adding sell-side liquidity in here. The sellers will be adding sell-side liquidity in here to work the price down. The selling pressure is going to be applied into the S&P. It's not a spoof. The selling is on the NASDAQ, and they are short the NASDAQ, which is exactly right. The buying is in the S&P, and all they're doing is pulling liquidity off the S&P. They're not adding liquidity, they're pulling it. When they pull it, they start buying quietly in terms of small size. Small size. Because they're trying to balance out a portfolio against something like the YM or the Russell or the NASDAQ. And then what happens is that they then stop adding liquidity into the NASDAQ. They start aggressively buying discounted to S&P. And now obviously we start seeing them adding liquidity onto the S&P behind their buys. And then they pull all the liquidity off the NASDAQ. They close off their NASDAQ quietly as well as part of the process. And that might either leave them with an index hedge or an outright S&P buy trade. And that's why when you see the likes of this trade here, this was one of the live trades that we did this morning. You can see here that there would have been a start here on this candle, and then we get the max buy trade, and it goes up. There's a start here. There's a start here. We never get higher prices, so we never get a sell. There's a start here. We never get lower prices. We never get the buy. There's a start here. We never get lower prices. So there wasn't a buy either. So when we do this idea, when we find this trade, we can obviously start to recognize the process behind this trade, won't we? We're able to recognize the process behind what we're trying to do in these areas. And obviously from that process, we start getting the best possible trades. We're not trying to catch falling knives. We're not trying to be heroes in front of an onslaught of selling or buying. All we're trying to do is make sure when we trade, we're trading with the highest probability. And obviously that's what we're doing already. We're already hitting 100% winners at the moment on these trades. So we're in great shape. Everything's looking good. We got a good major breakthrough yesterday. Well, I knew we would. It wasn't a breakthrough. It was just the fact that we ran out of time the last time. Otherwise, we'd have had a breakthrough last week. But we had the time. We had the time last night. We were able to use it effectively, and we're in a very, very good place now. And it's about packaging up NinjaTrader and Sierra charts and seeing what we can actually have on the screens.